If this was about oil, we would have went into Venezuela a decade ago. Trump's talking about all these U.S. companies, Exxon, they have to go spend hundreds of billions of dollars in the country. Who's paying for that? How are they going to do it? How long is it going to take? By the way, the Trump administration, they're going to have to win midterms. They're going to have to win re-election. The problem with the American political system, or not the problem, the reality is that it's 4-year cycles. If you lose, then who's to say the next administration is going to continue on with the project? All data, all facts point to oil and drugs are political theater.
Over the weekend, U.S. military forces stormed Caracas, the capital of Venezuela, in a surprise operation that few saw coming. In the early hours of the morning on Saturday, explosions echoed across the city as elite troops moved in, capturing Venezuelan President Nicolas Maduro and his wife and flying them out of the country to face charges in the United States. Within hours, Washington was openly signaling that it was now calling the shots, politically, economically, and strategically, in one of the most resource-rich countries in the Western Hemisphere. In his latest podcast, Strike CEO Jack Mallers lays out why the oil and drugs narrative is largely political theater. He walks through why massive energy investments take years, why no administration can guarantee continuity long enough to see those benefits, and why none of the data supports Venezuela as an immediate inflation solution. According to Mallers, the surface-level justification is designed to be digestible, but it completely misses what's actually driving these decisions. His argument isn't rooted in ideology or partisan politics. It's rooted in incentives, supply chains, and the structural cracks forming in the global financial system. And once you understand that framework, the Venezuela situation starts to look less like a regional intervention and more like a strategic inflection point. But Mallers' analysis doesn't stop at geopolitics. What makes this moment especially important is where it sits in the broader macro cycle, and why Bitcoin keeps reacting the way it does. As the old post-1971 system strains under debt, deficits, and monetary expansion, assets that sit outside that system start to matter more. In the next section, we'll go deeper into why this isn't just about Venezuela, why timing matters now, and why Bitcoin appears to be positioned right at the intersection of all of it. If you find value in this kind of deep macro analysis, make sure to like the video, subscribe to the channel, and watch closely as Mallers breaks down why the coming liquidity cycle could fundamentally reshape the crypto market. Thanks, and enjoy the video.
This is from the White House Twitter and President Trump. Quote, "The United States of America has successfully carried out a large-scale strike against Venezuela and its leader, President Maduro, who has been, along with his wife, captured and flown out of the country. This operation was done in conjunction with U.S. law enforcement. Details to follow. There will be a news conference today at 11 a.m. at Mar-a-Lago. Thank you for your attention to this matter. President Donald J. Trump." Now, I think the first thing to note, and that I want to tell you guys, is that the reason that President Trump has vocalized to the American people are two. One, that this was about oil. So Venezuela sits on the largest oil reserves in the world. They're oily rich country. And this was one about oil, and two about drugs. Is that Venezuela was importing or exporting from their vantage point. We were importing drugs from Venezuela. That our drug problem in the United States is largely to blame for other countries like Venezuela, and that they were killing the American people, and that was our oil. These are direct quotes, and that is the narrative from the president. I'm here to tell you, I call bullshit. Okay, now listen, it's a nuanced bullshit. The older you get, the more success, the more things you build, the more success you have. You realize that the human brain likes to conceptualize things in black and white because it's easier. We get uncomfortable when we're not in control. We get uncomfortable when we don't understand. And part of finding eternal peace and being comfortable with the uncomfortable is understanding that you don't always understand and that you're not always in control. And so we have a tendency to lean on extremes. It's either all left or all right, all up or all down. Okay, so I'm here to say there's some nuance, and we're going to walk through all the nuance today. But if I were to pick an extreme, I will say the oil and drugs narratives are political theater. They're nonsense. They are what was necessary to sell this domestically, to sell this to the voters. The voters understand oil. The voters understand drugs. The voters don't like the fact that their kids are overdosing on drugs. The voters don't like the fact that the United States has the largest drug problem it's ever had. It has an opioid issue. It has a fentanyl issue. You can blame that on Venezuela. You could say that's one of the core reasons we went into the country. And for all the sophisticated market participants out there, well, it's about oil. It's about keeping the oil price down. It's about protecting the treasury market, the long end. It's about protecting inflation. Political theater, I say. Political theater. Let's get to some data. Let's get to some facts and officially dispel what I believe is political theater, okay? This tweet from Jim. Venezuela is a founding member of OPEC. Their official statistics show its production in blue is down 71% from its 1998 peak. Its sustainable capacity max output within 90 days if held for a year is 1 million barrels a day. Venezuela is at its maximum right now. By the way, this used to be 3 million barrels a day. If this was about oil, you have to ask yourself, why now? This is about the worst time to make a move on Venezuela if this was about oil. Oil is political theater. Oil is selling voters something they can understand. The American people are being sold oil, drugs, and freedom. All things they like, no more drugs, more oil, and freedom. That's what the voter is being sold. Check out this slide, guys. The enormous caveat is that OPEC just publishes the numbers given to them by its members without any independent audit. In the late 2000s, Chavez tripled the reported reserves without commensurate new exploration, seeking increased international and domestic prestige. 300 billion. The oil reserves number from Venezuela is a fabricated, made-up number. It's not real. It's not a real number. The OPEC number, and this is the crazy thing about today and the internet age, is we have such a high level of connectivity, which is insane. It's amazing. The level of efficiency technology brings to humanity is such a blessing. I mean, we can run an insolvent bank insolvent in like 2 minutes. Silicon Valley Bank went insolvent faster than a Hot Pocket would be heated. But also fake, like, it's not fake information. Misleading information perpetuates itself. If this was about oil, we would have went into Venezuela a decade ago. If this was about fighting inflation, this is about it fighting inflation in 5 years. Sure, fine. I'll take you at it's about fighting inflation. It's about energy prices. It's about combating Russia's oil narrative and resource with our own. Fine, I'll take you at that. Like this Russian billionaire said. But that's a 3 to 5 year thing. Trump's talking about all these U.S. companies, Exxon, they have to go spend hundreds of billions of dollars in the country. Who's paying for that? How are they going to do it? How long is it going to take? By the way, the Trump administration, I mean, they're going to have to win midterms. They're going to have to win re-election. The problem with the American political system, or not the problem, the reality is that it's 4-year cycles. If you lose, then who's to say the next administration is going to continue on with the project? All data, all facts point to oil and drugs are political theater.
Jack Mallers argues that the U.S. move into Venezuela has little to do with oil and everything to do with the breakdown of the post-1971 dollar system and the resulting national security fallout. Since abandoning the gold standard, the U.S. dollar's role as the global reserve currency allowed America to hyper-financialize its economy, run perpetual deficits, offshore manufacturing, and export inflation instead of producing real goods. That model worked only while energy, minerals, and supply chains were cheap and politically neutral. Once China weaponized supply chains, especially rare earths and critical minerals essential for manufacturing, defense, and AI, the fragility of the system was exposed. Within this context, Mallers frames Venezuela as a strategic flashpoint rather than an oil play. China has deep investments in Venezuela's oil and critical minerals. Iran has reportedly established weapons and drone infrastructure capable of reaching U.S. territory, and Russia has maintained a military advisory presence in the country, all within America's hemisphere. Mallers argues that this convergence of Chinese supply chain dominance, Iranian military reach, and Russian influence near U.S. borders transforms Venezuela into a national security issue tied directly to critical minerals, defense readiness, and the race to reshore production and win the AI era. The U.S. response, in his view, reflects a broader shift away from a purely financial empire toward securing physical resources and strategic geography.
Why now? You have to ask yourself, why now? Not oil, not drugs. It's about critical minerals. It's about rare earths. It's about China, Russia, and Iran. It's about this multipolar world. There's the West versus BRICS. That's why now. That's what you guys have to appreciate. I was reading this piece. Hold on, I want to read this quote. Venezuela represents the only location where all three adversaries operate simultaneously. The oil is secondary. Breaking Chinese supply chain dominance, eliminating Iranian manufacturing capability, and expelling Russian military presence were the primary. That is it. Now, let's talk about what does this mean for Bitcoin. This is not a geopolitical podcast, although unfortunately, we do find ourselves involved in that. That's just what's happening in the world today. What's it mean for Bitcoin? Now, well, before I go into this one, what I will say, guys, is there's nothing more validating to the worldview we've shared on this show than what's happening right now. The U.S. remember in the last few episodes, we were talking about wartime economics. The Fed's balance sheet is probably going to have to expand tremendously. The U.S. is going to have to print a lot of money. Who's going to finance all this shit? If we need to spend $1 trillion to get Venezuelan oil production to a point where it can actually benefit us in our worldview and the American people, who the paying for that? We run a $2 trillion deficit. We don't have $2 trillion. The only way we can pay for that is by printing it. Who's going to pay for the AI build out? Who's going to pay to stockpile all these critical minerals? Who's going to pay to reshore? This is all extremely validating. What I would explain the market's reaction and Bitcoin's reaction, and listen, the truth is no one actually knows. Anyone that tells you like, oh, I know why things are going up and down, you no, you don't. But my personal worldview, everything we thought is happening. This administration is going to print the money. This administration is going to try and reshore. This administration, the number one prerogative for national security is critical minerals, is the global supply chain. Is Greenland off the table? No. Watching what happened in Venezuela, every market, bond markets globally, stock markets, Bitcoin, gold, silver, it all screams it's happening. Because in 2025, it wasn't very clear. Some tariff wars, the Fed didn't align with Trump. And it was like, well, are they going to print the money or not? Dollar liquidity is getting pretty dry. You open the year with a bang. Oh no, we're right. This fiat system, if it's going to perpetuate, we're either going to enter austerity or they got to print the money. And the U.S. is going to have to enter wartime financing. The Fed's balance sheet's going to have to 5 to 10x. And we're going to have to find critical minerals if we're going to reshore, protect ourselves, and unwind from the post-$71 system. So I go on to the next slide. Here's kind of like what we've been talking about. I wanted to put it in a slide. In Q4 2025, you had this kind of macro growth scare and shutdown. So the government shut down, which led to there being no economic data. When there was no economic data, there was a growth scare of like, is the economy growing? Are we entering a recession? All right. And then there was a lot of lack of liquidity for that reason. The TGA, the Treasury General's account, hit over $1 trillion. And so risk started, it became risk off. Bitcoin started to bleed and lead its way down. And then Bitcoin kind of found itself in this self-fulfilling prophecy, in this negative doom loop where everyone's like, oh, 4-year cycle. And this is the top, and having. And, all the bears were saying we're going to 50K, we're going to 10K. And I was very consistent. And I said, listen, Bitcoin is very simple, guys. It's priced on future expectations of fiat. Bitcoin is some combination of tech plus fiat liquidity. Okay? And Bitcoin's going to move when they print the money. It's not going to front run it like gold, because Bitcoin, like gold is getting, foreign sovereign state trade surpluses piled into it. Like China's like putting $500 billion of trade surplus into gold. They're like remonetizing because they're worried about getting sanctioned by the US. Russia already did get sanctioned. That's not, Bitcoin's a $2 trillion asset. It's not a $40 trillion asset. It's not there yet. Bitcoin is very simple. More fiat, higher Bitcoin price. And so I've been very consistent. QT just ended. The Fed was tight. The Fed was making the dollar scarce for the last 3 years. For almost 4 years. You've heard Trump and Lutnick and all these guys say, with the highest rates in the world. So what's coming in 2026? Rate cuts, housing crisis, Feds expanding their balance sheet again, fiscal stimulus in 2026. We've got the big, beautiful bill. We've got new fiscal bills, supposedly. Now we've got Project Venezuela. Trump's being like, we're going to go into Venezuela and spend the money and use those resources. Who's paying for that? We are. You, the dollar holder, the American taxpayer, you're paying for that. We've got stimmy checks. So what is Bitcoin reacting to? What are assets reacting to? The debasement trade is well and on. Because there's only one way out, and they gotta print the money. It's not about oil. This is not about fentanyl overdoses, although no one likes fentanyl overdoses. That's not what this is about.
In the aftermath of Maduro's removal, attention has naturally focused on Venezuela's oil reserves, but several analysts believe another asset may be just as significant, if not more so. According to experts cited by CNBC, Venezuela is widely believed to have accumulated meaningful exposure to Bitcoin over the years, potentially worth billions of dollars.
Reports suggest Venezuela may have quietly amassed a Bitcoin reserve worth tens of billions of dollars. None of that is confirmed, but if the U.S. seizes those coins and adds them to its own strategic reserve, you're looking at potentially a substantial supply of BTC getting locked up for years. That is the kind of narrative that crypto traders love to move on. And technicals are also helping here. Bitcoin is back above its 50-day moving average for the first time since that major October washout. That move forced shorts to cover into the rally. The options market tell the same story. Derivatives exchange Deribit shows the $100,000 call is now the most popular bet on the board.
The logic is straightforward. A country frozen out of the global financial system doesn't just sit still, it adapts. And in Venezuela's case, that adaptation likely included holding wealth in assets that operate outside traditional banking rails, gold, cash, and increasingly, Bitcoin. Because Bitcoin is decentralized and pseudonymous, no one can say with certainty how much Venezuela may hold or where those holdings are stored. Estimates vary wildly. Some sources suggest relatively modest amounts, while others, speaking anonymously, claim the regime could control a shadow reserve large enough to place it among the biggest government holders in the world. What most experts agree on, however, is that if Venezuela did accumulate Bitcoin, it likely did so quietly, using distributed wallets, intermediaries, and non-traditional custody methods to avoid detection under sanctions. That makes on-chain confirmation difficult and definitive proof unlikely to emerge anytime soon. What matters more than the exact number is the implication. If Bitcoin was used as a parallel reserve asset, whether for storing value, facilitating trade, or moving wealth across borders, then its role in global geopolitics is no longer theoretical. And if those assets are now being sold, seized, redistributed, or repositioned, markets will notice. Outside these speculations, this is a huge event in its own right, which is why the crypto market reacted immediately and has been steadily gaining momentum since Saturday. If these speculations prove to be even only partially correct, there's absolutely no telling how quickly prices will climb even higher. And it's not just the narrative shifting, it's the positioning. While retail is still debating headlines, large, highly sophisticated players are already acting. Over the weekend, a well-known high-conviction whale, popularly known as the Bitcoin insider whale, quietly rebuilt massive long exposure across Bitcoin, Ethereum, Solana, and the broader market, now sitting on over $800 million in open positions, with profits swinging back into the tens of millions. This is someone who endured a $60 million drawdown, kept adding anyway, and only returned to profit as Bitcoin broke higher. That kind of patience, size, and timing doesn't come from chasing momentum. It comes from anticipating it. The smart money isn't reacting to what already happened. They're positioning for what comes next. In even more surprising news, Morgan Stanley has officially filed with the SEC to launch its own spot Bitcoin and Solana ETFs, moving beyond simply distributing crypto products and into directly issuing them. If approved, these would be among the first spot crypto ETFs sponsored by a major U.S. bank, offering direct exposure to Bitcoin and Solana without leverage, derivatives, or synthetic structures. With roughly $1.6 trillion in assets under management and more than 19 million clients worldwide, Morgan Stanley's entry dramatically expands the potential distribution footprint for crypto exposure. Plus, Bank of America recently just announced it will officially begin to recommend clients allocate up to 4% of their portfolio to Bitcoin and crypto. Timing matters here. When you zoom out, it starts to look less like coincidence and more like coordination. Large institutions aren't waiting for perfect clarity. They're preparing for a world where Bitcoin and select digital assets are no longer fringe instruments, but core components of the next financial regime. This isn't just a moment, it's a transition. And Bitcoin sits right at the intersection of it all. If you want to stay ahead of where capital is moving next, make sure you're subscribed, smash the like button, and turn on post notifications for more grounded analysis. Thanks for watching.